If you like what you see, if I can please request you to subscribe to my channel. So what is market cap, enterprise value, and why is cash king? The market capitalization is basically how much a company is worth as determined by the stock market. You may have heard the terms large cap for companies with values over 10 billion. Similarly, you may have heard the term mid cap for companies with values over 2 billion but less than 10 billion. And small cap for companies with values over 300 million but less than 2 billion. The market cap gives a great overview of the size of a business and makes companies identifiable compared to their peers. But how do you calculate it? The market cap is calculated by simply multiplying the share price with the total number of shares outstanding. Is there something more comprehensive than the market capitalization? There certainly is, and it's known as the enterprise value. The enterprise value takes into account the market cap, but also looks at the short and long-term debt of a company. It also takes into account the company's cash positions like certificates of deposit and treasury bills. The enterprise value will also be affected by minority interest and unfunded pension liabilities. But for the most part, you can think of the enterprise value as simply the sum of the market cap and the total debt and subtracting the cash components on the company's balance sheet. Can a company have too much cash, and can cash even be dangerous? Theoretically, if a company has too much cash, its enterprise value will be negative. There are many reasons why companies have cash on their balance sheet. The company is performing very well, and management has no time to figure out how to make use of it. Well-run firms and software services do not have high capital expenditures. Their cash grows. Capital-intensive industries have a much harder time to keep cash reserves and need to keep it to fund economic downturns. I would argue that cash comes with an opportunity cost, and management should be using it to deliver returns. Keeping it in the bank is a very expensive proposition. Cash-rich companies can, not always, but they certainly can develop poor habits and not keep a tab on their expenses. So is cash really king? I do agree that cash is certainly central to a company's day-to-day work. It allows companies to cover short-term operations. It allows them to buy assets and to acquire other facilities. Companies can also satisfy their debt obligations and weather economic downturns. So my question for the day is, what is relative valuation?